It's Thursday, the 6th of October, 2022. Welcome to the Fast Five by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 stories in 5 minutes. The first story is an absolute cracker. The local share market has had its best run since March 2020, with around $120 billion in value added over the past 2 days. Incredible.
Yeah, amazing rebound, really. And while it's too early to say the worst is over, it's just nice to enjoy the bounce. Yesterday morning, the market hit a high of 6,820 points. That's the best in 3 weeks. It finished the day up about 1.7%. The reason for the bounce is a couple of strong days on Wall Street and the Reserve Bank's decision to raise rates by just 25 basis points on Tuesday. Underlying both is hopes that interest rates in the US and Australia won't have to rise by as much as first anticipated. Who's done well? Well, the big banks have, and we care about that because most of us have shares in the big banks via our super accounts. Now, the banks are supposed to perform well when rates rise because they can widen their profit margins, but this time around, the speed of rate hikes meant investors sort of became more worried about the risk of a recession and what that meant for bad loans. Anyway, with that risk easing slightly, bank share prices went up. Who else did well? Well, the stocks that do poorly when rates rise, or the ones that tend to do better when times are good, they're doing really well. They have the last couple of sessions, albeit off very low bases. James Hardie Industries is an interesting example, very leveraged to the US building industry, up 11%. The real estate investment trusts have done really well. Goodman's up 9% in 2 days. Several of the tech companies have done really well. REA is up 13%. Software group WiseTech Global is up 13% as well. Xero is up more than 10%. They're high quality tech companies with good cash flow, good earnings. That's what's winning out there at the moment. Of course, 2 good sessions doesn't make a turnaround. Things could go south still. Let's enjoy it while we can.
Yeah, big couple of days. Story number 2, Sean. In about 18 months, a little bit over 18 months, we are due to get a whole stack of tax cuts. They are referred to as the Stage 3 tax cuts, and there is a big battle at the moment over the future of them, with reports of a division within the Albanese government over whether to go ahead with them. So, are we going to get a tax cut or not?
Well, look, the government seems to be backing down. In short, the Stage 3 tax cuts abolishes the 37% tax bracket. So everyone who earns between $45,000 and $200,000 would pay 30% tax rate. A lot of middle-class people will win on that. But Jim Chalmers, the Treasurer, and Katie Gallagher, the Finance Minister, just sound as if they're backing down from it. Assistant Minister to Treasury, Andrew Lee, kind of took the opposite approach. He said, we're sticking to the plan we took to the election. It's important for the integrity of democracy. There is a brouhaha going on about that one, Michael.
Oh, glorious. Fantastic word. Well done.
Thank you.
Story number 3, Sean, the fallout from the Reserve Bank's decision to lift the cash rate by 25 basis points, not 50 basis points on Tuesday, seems to have actually won plenty of plaudits.
Yeah, people just think it's a good idea because it allows the central bank to assess the impact of rate hikes so far. Now, the consensus view is that the cash rate will now peak around 3%. It's currently 2.6%. So if that's the case, it'll mean from the bottom to the top of the rate cycle, the increase in what people pay in their monthly payments on a $750,000 variable mortgage will be about $1,200. A fair bit, but it could have been a lot worse. Some economists aren't quite so optimistic. The team at ANZ, for example, reckon that the cash rate will go to about 3.5%. That would obviously add quite a bit more to repayments. But really, for we homeowners, it just looks a little better this morning.
Yes, indeed. Story number 4, Sean. Australia's growing love affair with electric vehicles is continuing, it seems, with the Tesla Model Y electric car actually the 3rd largest selling vehicle last month.
Yes, nearly 4,400 were sold, just behind the Toyota Hilux and the Ford Ranger Ute. Overall, nearly 94,000 new cars were sold last month, up about 12%, according to the Federal Chamber of Automotive Industries. In total, 7,247 battery EVs were sold in September. Nearly 22,000 have been sold so far this year. Still less than 3% of all vehicles, but it's growing fast.
And our final story number 5, Sean. The European Court has done pretty much everyone a favour by voting to force Apple into adopting the USB-C port for its iPhones by 2024.
And if it's forced to do it in Europe, then it's more likely Apple will adopt standardised charging and connection cables in Australia and elsewhere. The new rules means portable electronic devices, including smartphones, tablets, cameras and laptops, will be required to include the port. Many Apple products already do so, but not the iPhone. Imagine it, a common charging port across all devices. Imagine how many family disputes that's going to solve.
Oh, dream result. That's it, the top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 6th of October, 2022. Remember to hit follow and don't forget to check out our new podcast. It's called How Do They Afford That? All about making your money work a little bit harder for you. I'm Michael Thompson, and that was the Fast 5 by Fear and Greed. Have a great day.